Dear guests, dear speakers, dear participants in this panel, welcome to this discussion, which will focus on money and finance. I would like to take this opportunity to thank the organizers, everyone involved in the preparation of this forum and for making it such a remarkable event. And as a nod to our guest from the US, will both be using Bulgarian and English in order to keep dynamic, to keep the exchange dynamic.
The last 2 days, I was listening to two remarkable speeches, both of them very different. One was delivered by an ex-Italian Prime Minister and politician, Enrico Letta, and the other by the famous Nobel Prize winner in economics, professor who spoke about the future of the world and the global economy. They were very different, but there was one common subject, and that subject was the economic prosperity, the future prosperity of the global economy and the world. And I was thinking that today, in a very practical terms, all of us here and this panel were representatives of the financial sector. The practical question is really what times we're living in and how we can build this future prosperity. Until very recently, we thought that the times of low interest rates, the era of low interest rates is over, and we have more stable and predictable times. Unfortunately, the economy, the global economy, is quite abnormal on very many dimensions. And doing business, attracting and raising money for long-term investments and for competitiveness, for global prosperity, is a difficult subject. So with this backdrop, this economic backdrop, I would like to open this discussion about how we can attract money to make Europe and the European economy more productive in the long term and more competitive. With me here today, I have fantastic speakers and experts in every area of finance. And to open the discussion, I would like to put two notions. The first is really from a broader perspective, from a more general perspective, what each of you believes is necessary to make Europe more competitive and how we can bring competitiveness back. I'll give a hint on some interesting facts which I read in analysis when preparing for this panel. The first is that it seems that the single market has many regulatory and administrative barriers which make Europe less dynamic in trade and in services. Europe spends less on research and development, and this affects our potential future growth. We make a huge, great use of renewable resources, but still the electricity prices for the industry becomes very high and it makes them uncompetitive. And in very many fronts, technology and innovation, in fintech, Europe lags behind US and other developed economies. So with this, I would like to turn to Mr. Radonov, who is heading the Bulgaria office of the European Investment Bank. You're an experienced banker and you know all the work of your group. You have been at the forefront financing major public infrastructure projects in the country. But also now you're doing more investments in very many more high-tech and really innovative solutions. So what do you think you can help and you can do now that you know the capital has really two faces? It's not only where it comes from, but where it has to be invested. Right. So what do you think?
Thank you very much, Sophie. Welcome to our guests. Thank you very much for the invitation. Thanks a lot to the organizers for this great event, which has established itself as probably one of the best, not only green, but also business forums in the country. And maybe I'll give you just a quick background so that for those of you that are not aware what the European Investment Bank Group stands for. Effectively, this is the bank of the EU citizens. Each member state has a share of that bank. And it's the European Investment Bank Group because it's composed of the European Investment Bank and the European Investment Fund. And what the bank does is the investment arm of the European Union. It's mainly investing in long-term infrastructure projects. It's supporting various policy objectives of the European Union and the European Commission in particular. In Sofia, you would have the metro, which is one of the flagship projects that we've been financing over the last 12, 13 years. And what is more relevant for today's discussion is probably the European Investment Fund. This is the daughter company of our group, and it's the risk-taking arm of the institution. It is the biggest venture capital investor in Europe, as we stand today. And it has invested pretty much in every major, and not only major, venture capital funds that are operating on the European market. And coming to your question, now, what we can do effectively to mobilize the capital, because in Europe, we don't have a problem of capital. Capital is rather abundant, one might say. We have a problem of capital deployment. And Europe's biggest untapped investor is Europe itself. European households are sitting on 11.5 trillion euro of financial assets. And 1/3 of those assets are invested in deposits and savings accounts, low yield instruments. So as a comparison, and so that you have a benchmark, in the US, we're speaking about 10% of their financial assets, household assets, invested in low-yielding instruments. So this massive gap between the two geographies, if you wish, has its fundamental reasons. And now the question is what we can do, because if we're looking at the analysis done by the European Central Bank, unblocking, basically, if we are aligned with the same pattern of investments as to the American households, we would have roughly 8 billion flowing into bonds, stocks, fueling in the private market as well. And that roughly would bring around 350 billion per year of financial flow. And that is a massive amount of money. So we are holding the key to the problem is in our own hands. So now we have to see what is blocking institutional and retail investors from investing in this asset class, the private markets. And it's a number of reasons. It's a rather complex thing, but first of all is the lack of accessibility. It's not that easy to go and invest. You know, it's very simple, rather simple to invest in public markets, but private markets are a bit more complex. And in Europe in particular, they're lacking harmonization. And one of the reasons the European Commission is trying to launch the Savings and Investment Union and push it forward is precisely that, to harmonize those markets, to create savings instruments that would allow retail, institutional investors to put the money into action in a more transparent, easily accessible, and not costly way. So that is, you know, the first part of the equation. Now, financial literacy comes second. And it's even more pronounced, if you wish, in Bulgaria, because if we look at the Bulgarian market, most of the money goes into real estate and deposits. Well, those are pretty much the two main investment, so to say, assets. And financial literacy, you know, educating the citizens, what is the risk return and the long-term benefits into investing in venture capital, private equity, infrastructure projects, how those projects, what would bring them in terms of financial return, this is very important. So educating the public by campaigns, lectures, you name it, it's a very important element solving this problem. And now comes, you know, investors like to know what they invest in, which is normal, what returns that brings in. Unlike public markets, that information is rather obscure in Europe. We don't have much of a transparent information or comprehensive set of information and data in order to analyze those investments. And this is one of the problems we are trying to tackle. As I mentioned, the European Investment Fund is one of the biggest investors, the biggest investor in venture capital in Europe, and has a lot of data. And now we are launching a digital portal that would give access to retail investors, to institutional investors, to that data that we're sitting on, so that they could see the historical performance of these funds, selected funds, what yields they have. You know, we will obviously put certain restrictions so that, you know, there's GDPR rules and so on and so forth. We will not be just disclosing names, but done in a comprehensive and understandable way, so that public could access and understand what actually those investments yield in real terms. Because this is an extremely important element, and once you bring more clarity and transparency into the market, combined with financial literacy, this would certainly help unlocking this dormant capital.
Thank you very much, Todor. Actually, you gave another layer to this discussion, and you outlined really important aspects like intangible resources that are necessary for unlocking the capital, like building trust, transparency, literacy, financial literacy, and education. And this helps me to make a bridge to the next question, to Mr. Tsanko Arabajev, who is an executive director and member of the board of the only state-owned bank that we have, Bulgarian Development Bank, and he's also a member of the supervisory board of 3C's Investment Fund, another very successful trans-border investment initiative. Цанко, много ми е приятно, че си част от този панел и бих искала да...
Tsanko, I'm glad that you are here with us. So my question is, what do you think and how do you see the value of such partnerships like, the Bulgarian Development Bank, but also Bulgarian participation in other initiatives concerning financial instruments that are aimed at building trust and transparency? Can we unlock the financial potential in that way? Well, thank you very much for your question. Good morning. It is my pleasure to attend this event for a fourth year in a row. I'd like to congratulate the organizers on the excellent organization. Every year I wonder what they will come up with in the next year in order to upgrade the forum. Back to your question now. Yes, it is one way to achieve economic growth. International partnerships, unlocking capital, better functioning capital markets. But this is just a part of the picture. Depending on the role each one of us plays and the approach to addressing the challenges, we see different outcomes. So we have the regulators, we have the policy makers, we have the development bank. I would use this opportunity to tell you more about us, the way we see problems, but also what we have been doing in order to address those problems. what was said about the issues relating to the access to capital is, of course, true. But there are also problems when it comes to investing the available capital. We are about to launch an interesting financial product at our bank. It would allow for public enterprises to invest in new energy saving and energy generating installations. It is also a product that can be securitized, so it can be traded on the Bulgarian stock exchange. And that's something I believe is key. And when it comes to unlocking a private capital, we need good trading instruments, but also we need institutions to set an example and make those instruments available to both institutional and private investors. Our partnership with ASO would allow us to invest millions of levs so that they could reach the business and public enterprises in order to address the problems of energy prices and energy efficiency. This is a good example that we would like to follow. Yesterday, or last night at the dinner, I had the opportunity to speak briefly with Professor Acemoglu. I asked him a question which is important to me: how we can reduce inequalities in our society, because inequality is a problem that is often ignored by most of us. We see the consequences of it, we see its dimensions, but we rarely talk about it, we rarely discuss it. This division between the rich and the poor, the political antagonism that we see across Europe, the lack of trust in the institutions, in the information provided, and all that has its roots in inequality, I think, because economic inequalities extend into educational inequality, and differences deepen. Professor Acemoglu said that the only way to deal with that is through investment in education and in societies. So this is what we have been trying to do. In other words, we try to address problems where funding has been insufficient, or where availability to capital, to funding, has been insufficient. And for the rest, everybody else, we try to provide financing at the best possible terms. I often say what we have been doing together with the Council of Europe, and I have made a commitment so that next year, if I'm here, I would be telling more about our partnerships, and I'll try to keep my promise. You probably know that we signed an agreement with the European Investment Bank at very favorable conditions, at prices which are lower or the same as the funding provided to the Bulgarian state. So this cheap resource that we have made that has been made available to us will be transferred to you, to the business, without the Bulgarian bank holding any of it. So the fact that we're getting the money cheaply doesn't mean that we'll try and make a profit on the back of the business. This and many other steps is what we have been taking in order to reduce inequality and incentivize growth, as well as unlock capital to be invested in such projects. Sanko, it is indeed true that the Bulgarian Development Bank has a key role to play, and we try to play it by mobilizing resources coming from our international partners and then channel the funding into the Bulgarian economy, hoping that this would result in economic growth, which means higher productivity and higher competitiveness, which is good for the Bulgarian economy and it's good also for the EU economy. But there are certain issues that still need a solution. And with that, I would like to turn over to Mr. Gikov.
So, Mr. Gikov, you are a chair of the board of directors of Jeremy Bulgaria. And this is a vehicle, an instrument which is known for its high risk appetite and risky investments. There is a statistics that says that the EU has a high level of private investments as a percentage of the GDP, but still the venture capital investment is much, much lower. And this naturally limits the development of cutting-edge technologies and companies. What would you recommend? What do you think is the best way to structure instruments, what these instruments should be, so we can unleash this capital for more productive investments?
Добър ден и от мен.
Good morning.
I would like to congratulate the organizers for really putting such a great platform which addresses not only problems and challenges, but also provides the base and the discussion for finding solutions and opportunities. Maybe on a general note, what I would like to share is that, as Theodore mentioned, EIF is the biggest VC investor in Europe, so there is a really huge dependency on the entrepreneurial ecosystem in this. And our goal is to really try to boost the private funding in order to have a better multiplier effect on the overall economy. But in order to do that, we need to put ourselves in the shoes of the private investors and ask ourselves what exactly are they looking for. So there are two major things that we always need to keep into consideration. First of all, is there a sufficient pipeline of really good projects which are addressing global solutions which have global problems which have a unique solution. And if we are doing so, and are they related to the current world trends? And if they're doing so, we were discussing before that, since the overall European mentality is much more risk-averse, we need to provide the proper success stories in order for these investors to believe and basically have a chance to invest in these opportunities. As Professor Acemoglu yesterday also mentioned, there are two ways to achieve and to boost economic growth. First is to finance projects which are already existing, and you can either improve them in terms of quality or cost. The second one is EDT, the so-called emerging and disruptive technologies, which for sure Europe has a better competitive advantage, because in terms of cost, not only the energy prices, but also in terms of demographics, is something that unfortunately we don't have competitive advantage. But in terms of talents and innovation is something that we can really rely on. So our focus in structuring the financial instruments in this regard should be channeled in this area. And in order to do so, the capacity building, as it was mentioned in the beginning, is really crucial. The so-called tech transfer, which is usually coming from the universities, should be really the focus, not only in Bulgaria, but also around Europe. And there was a really great example, which is coming from Finland. The universities there, the funding that they receive is based on the number of patents, on the number of commercialized projects that basically they have each year. So the stimulus and the motivation in this regard should be crucial. The same thing we discussed is happening in US, in order for these emerging and disruptive technologies to become commercialized. And the second thing is the scaling up. What we really lack is ability to scale. And now there are a lot of good measures which the EAB and together with the EIF are taking in this, and also the Commission in this area. But we need regional and we need European champions in the sectors that are going to lead the global trends. And not only that we need them, we need the funding, but we also, the timing is crucial. At the previous annual event of EAB, there was a really good testimony of one of the, I would call it most advanced, not startup, but already a scale up, which was, we were discussing yesterday during the dinner, company which is basically advancing the development of the fusion energy. And the fusion could be the next big thing in the world in terms of, and the cost of its production is already declining at a stage which in the next 3-4 years could be quite competitive with the other energy alternatives. So the testimony was the following. The CEO of the company said, we're a Switzerland-based company. The talent is there. The technology is there. We received 150 million from EIF, from EAB, and from other sources from Europe, and we were very happy in the beginning. Then for the next stage, for the scale-up, we had to wait for more than 1.5 years in order to receive certain licenses and certain other red tape administrative requirements to proceed with the next step. In the meantime, University of Colorado told us, why don't you do your pioneer project with us? And it took 2 months in order to do it. So he said, as a CEO, I'm very happy because I'm boosting the development of this technology, and I know the timing is of essence because also China and also US, there are other competitors which are going into this direction, and I'm very happy because this accelerates my growth. But as a European citizen, I'm very sad because you know, we received so much help, and for the next step, we were a little bit stuck. So it's, in my opinion, the financial instruments should really go in 2 directions: the scale-up mode and the very early stage, where Theodore also mentioned that financial literacy is crucial in order to have a pipeline which comes bottom-up, which can feed the fund managers and have a population of less risk-averse investors. So, and the second thing is really the symbiosis between the VC instruments and the debt instruments and the capital markets, because we were also discussing that the capital markets in US, the annual turnover is $45 billion. In Europe is 15, and the same population. But it's just 1/3 of what could be achieved in terms of attractive private capital. And I was very happy to provide a good Bulgarian example. Most of the Bulgarians know that The latest unicorn that was announced was funded. It was called Shelly. Auterco was the previous name. It was funded by a VC in the beginning, some angel investors, then listed on the Bulgarian Stock Exchange, which provided additional fuel. And after that was dual listed in the Frankfurt Stock Exchange, which really boosted the development. So these examples show that centralized capital markets are important, but we really need to cut the red tape. Having the euro in Bulgaria is probably a really good next step, because in order for a foreign investor to buy stocks from Bulgarian Stock Exchange, they need to open a bank account in Bulgarian level, they need to basically pay in Bulgarian and so on. So this is something that we, I would say, step by step, we need to clear in order to facilitate the investment process of all the investors.
Before I turn to the next, Mr. Zanko wants to...
Sorry, Sophia, I would like to make a... Бих искал да направя коментар по повод на...
I would like to comment on what Marty has just said. I have a slightly different point of view concerning centralized stock markets in Europe. This is a key aspect of the Draghi report, by the way, which is a form of policy and ambition which we should place a much stronger focus on in Europe. But concerning the centralized, the single capital market, I would like to highlight that this could definitely be a benefit for many market participants, but countries like Bulgaria should be very careful in terms of this form of market integration, because, okay, setting up the infrastructure which facilitates investors from across Europe subject to the same rules and regulations, great idea, but small countries like Bulgaria have to think about the risks, and one of these risks is capital fleeing the market, because if I can make an analogy to the 90s when labor markets opened in Western Europe, opened in Bulgaria, we, for example, did not attract a single German engineer or a single Swiss banker. What happened is that hundreds and thousands of Bulgarian engineers went and found jobs in the West, and this caused us to lose competitiveness, and we literally slided back decades ago. In Bulgaria, there isn't a sufficient number of companies that are attractive to international investors, and the risk of losing our savings by the savings fleeing the local market and going to Western Europe is significant. This is something that we should realize. It doesn't mean that we shouldn't have a single market or that we are against the single market, but in terms of an ecosystem, I think we should be aware of the risks, and I think we should think about adopting a policy at national level that either minimizes or at least mitigates this risk, meaning that sufficient capital will stay in the country and will be available to local entrepreneurs. Economic growth is a function of the workforce, research and development, and capital. And if we lose out on the capital, it'll be very difficult to get it back. Thank you, Zanko. This comment actually allows me to elegantly pivot to our next topic and our next speaker, Mrs. Nestorova, and I will tell you why. But allow me to first of all say that Martin, you were very good in terms of describing the evolution of local entrepreneurs and gently reminding us that we need scale because multiplier effects can be achieved through more capital and greater integration. Undoubtedly, this is one of the drivers for growth. But it's an interesting point of view that we should be investing and using our savings and capital here. But on this point, I would like to give the floor to Mrs. Nestorova. She is the chairperson of one of the largest pension funds in Bulgaria, Doverie. You are the guardian of a significant portion of Bulgaria, of the savings of Bulgarians, money that is not being effectively used because of the number of barriers, because of the reform being incomplete. And I will be grateful if you give me your views on the multi-factor reform. In Croatia, there is a similar set of restrictions, but their pension funds are investing at least 5% of their assets in long-term assets, including in the US and Canada. Is this the case in Bulgaria? And where do you think the key is to unlocking this dormant capital? If there is one thing that has become clear here at the Global Green Transition Forum, including this panel, is that we have sufficient resources. The question is how to attract and unlock the potential of these resources and funds. But allow me to mention another type of resource. I don't know whether you can all hear me. Okay. Which is available here in Bulgaria and which we have not been leveraging as well as we could. We are talking about 27 billion in accumulated funds that are currently being actively invested by 10 pension funds. 3/4 of these funds are invested by 4 pension funds. Money that have been accumulating for a number of years, for decades to date. And one of the main questions that we still have to give an answer for is the following. All of you who are economists here would know that the economic blood of an economy is the long-term investment of the population for retirement in banks, in pension funds, because this is money that can be invested long-term. They are the real fuel that drives or can drive the economy forward. And in Bulgaria, this isn't happening as well as it should. This 27 billion is money that each new finance minister wants to get their hands on first thing after they come to office. I don't know whether you're aware of this, but the deficit under the first pension pillar is 12 billion euros, which means that if we spend this money, we'll be okay for 2 years, and then the budget will have the same problem. But it's a lot of money in terms of what we can do with the money. On the one hand, the implications of the money for the income of Bulgarians, and then in terms of the potential for investment. Pension funds are subjected to very, very strict regulations. And the principles we follow when investing these 27 billion is one size fits all, which means that the young girl who's just started work and the gentleman who's about to retire benefit from exactly the same investment product, which is absurd. Young people who have 40 years ahead of them have a very different risk tolerance. 1, 2, or even 3 crises on the financial market would mathematically be overcome very easily. You can all do the calculations. On the other hand, the risk appetite of different generations is different. The Stanford Graduate School of Business has published a research according to which young people would risk stability or rent or profitability in order to support sustainable projects that boost the development of a community. Older people are much more risk averse. They are not as ready to do this. But we are not able to offer different products to people who share different values, who have different risk appetites. All money in Bulgaria is currently being invested in the same way, very conservatively. The government issues debt, we buy some of the debt, and then the government uses the money for whatever, building infrastructure, improving energy efficiency, whatever. And there are 2 things that should be done urgently, and both are a matter of government policy so that we make a radical change into the new century. When we made the first steps last century, we banked on security and safety, and we have not done anything in the last 30 years. So we needed to introduce a multi-fund reform. What this means is that pension funds will be required and will also be able to apply different risk profile, which would allow more dynamic investment of the money of younger people, more balanced for those who are in the middle of their careers, and more conservatively for those people who are about to retire. This is just one element of the reform, because this reform can also affect the 3rd pillar, where our voluntary money is, and a reform would also again offer different attractive markets so that are better aligned with their risk appetite. For example, energy projects, green investments, and so on and so forth. And this multi-fund reform is something that we have been discussing as businesses and experts for more than 20 years to date. And this is the first recommendation the OECD gave to Bulgaria, and is the first conclusion that we reached having conducted our own internal analysis. The Economic and Social Council conducted a very detailed analysis and reached the same conclusion. So all we need to do is open public consultations.
Pension funds can use alternative investment instruments that they can support venture projects and can also help develop capital markets in Bulgaria. There are also other elements. We can reduce expenses for final users, and it would also allow funds to profit not from people's contributions, but from the higher investment, better investment outcomes. And that would also, of course, increase capital requirements for the funds. So this is one aspect of WEDs, But I suppose you are already fed up with hearing about it. But I believe there is also another dimension to it. And the capital that we keep referring to can be unlocked. And this is through infrastructure projects and public-private partnerships. So when we emit debt and then investors do as you like with it, this model has some deficiencies. There are some shortcuts, and we can use the capital to build roads and tunnels, improve infrastructure anywhere that we need it, including water infrastructure, etc. So, but this requires that we create conditions for pension funds to get into all that. And that requires two things from the government. Because we'll be faced with problems that are similar with the one faced by other banks. We need certain transparency, but also corporate governance and certain practices that will ensure investor security in terms of project management and optimizing the outcomes. So we need the joint efforts of all these international organizations and institutions. I know that state guarantee is not a topic that is favored by the government, and this is understandable, but perhaps there is a compromise that could be struck so that state guarantees would focus on the development phase. For example, if we are building a highway, it would be during the construction phase that we need those, and not so much afterwards. I believe that we can unlock those resources. But this is a huge topic. Apart from infrastructure projects and the multi-fund reform, there are other elements, but I suppose we are already running out of time. So let me just say that what is common to all of us today, and something that we won't have the time to discuss in detail, is that the underlying deficit, so what concerns us and investors and to ruling elite, is financial literacy, or the lack of it. Any unlocking of capital and any development should start there. This is not an issue just in Bulgaria, but in the rest of Europe, as we can see from the Draghi report. It's particularly rife here in Central and Eastern Europe because we lack basic understanding. 70,000 young people are facing litigations because of default on their loans. So I don't know if we'll be able to talk more about that, but I'll stop here because I've talked a long time. We need urgently multi-fund reform. We cannot delay it. We have to start a public discussion on it, because this is a major concern. We have to do what's necessary so that good corporate management would allow us to implement the projects that we need. Thank you, Svetla. That was a good overview and a good analysis of the key aspects that our topic involves and the way a pension reform can ensure better competitiveness or high competitiveness. We'll have another Q&A session at the end, but talking about financial literacy.
He's our American guest, a founder and established entrepreneur, as I understand, in health tech in a way. So, Mr. Riese, you listened to what Mrs. Nestrova said about the financial literacy. And she brought in a way the human element in all this. And I think you're best suited to tell us how you think we all, as savers, but we're also investors, we can really turn our intentions and see the opportunities out there. Just one statistics I want to say, which I found very interesting, is that they say Europe could have been much more advanced in its technological development, which comes also with a more risky development and entrepreneurship, which you have in abundance in the US. And we missed the golden opportunities in the 90s, where at the time of the first tech revolution, which came in the way through the internet, we didn't capitalize on new tech companies, and we couldn't immerse technology into our everyday business. So what is it that makes America so different and successful and competitive than the average European investor? Thank you.
Yes, thank you for the question, and thank you for the honor of being here today. It's truly a pleasure to be here, and thank you to the speakers and their wonderful points of view and the information they've already shared. I've learned a lot, and I hope to teach something today as well. You know, I'm speaking from a perspective of a founder, a serial entrepreneur. I've built startups that have failed, and I've built ones like the one that I'm currently running. It's called OPA, that's quite successful. So I've seen how it can be done well, and I've realized I've learned more from my failures than my successes. And I think that really speaks to the major point of what makes investment and the outsized returns quite different in the US. So I'll just speak to from my perspective, because I'm not an expert in what happens in Europe, although I have some understanding of how investment works there as well, or here as well. But let me give you just a little bit more insight. So Opiate is a data science company that's making this treatment of substance use disorders safer and more effective. And always start with the why behind our company. It's because we love our neighbors, and our neighbors in Europe as well. And what we're doing is we're building meaningful technology to help bring our neighbors home at night who are struggling with this chronic disease. And in the US, I think one of the things that really helps us be successful with the way that we invest is that we're way more risk tolerant. We understand as venture capitalists that only 2 out of 10 of our investments are going to pay off. One may be a medium return, and one's going to be a gigantic home run. And we just go into that knowing that that's going to be the case. I've successfully raised millions of dollars, and I've invested too, and I've just seen that probably the greatest difference between Europe and the US is just the risk tolerance. There's very much a fear of missing out of a good investment in the US, and in Europe, what I've gained from other VC firms is there's a fear of losing out instead. They really want to see this return much faster. And that's really just not realistic. You're not going to see an outsized return very quickly. Something that I wanted to bring to your attention as well is the fact that in the US, trust and accessibility are really key. We have platforms like Robinhood and other crowdfunding opportunities for individuals who are, working class folks who want to invest their hard-earned dollars in something other than the capital markets, that they have a platform that provides them understanding of what the risk is and what the regulatory opportunity or challenges are, but allow them to have the choice. And of course, education is an important key, but we have got this expression in the US, and I shared it with Martin when we were chatting earlier, that when one country is arguing whether or not the glass is half full or half empty, I've already sold it. So, it gets to be a point where we can have a lot of discussion to analyze the situation, but at some point you just have to act. And just to provide, some context, the city that I'm from is called Wilmington, North Carolina. And if you look in Startup Genome and other websites, it's the most innovative city, under 300,000 individuals in the entire world. Some of my friends have started companies that have already gone public. So if you're familiar with a group called Encino, a good buddy of mine started that company. It went public for $1.7 billion. And I was friends with him while all this was happening. He called me from, when he was on Wall Street ringing the bell, he sent me a text message and said, "Hey, I'm ringing the bell." So like I've seen this happening, and I'm kicking myself because I could have invested $50,000, would have been 2.1 million, 3.5 years later. Now that's kind of actually 4.5 years later. That's obviously doesn't happen very often. But things like this happen much more commonly in the US, and particularly where I'm from, Thermo Fisher, which I'm sure you're very familiar with, bought PPD, which was also started in Wilmington, also a colleague of mine. That got bought for $17 billion. And this is because people decide at some point, I need to make a decision, invest in something I believe in, get enough information to be able to feel educated enough that, yes, I'm taking a risk, but I know what I'm doing, and then allow them to actually do it. And one of the things that really benefits us in the US, hopefully I'm not yelling at you, does this sound okay? Because I can't hear out of my right ear. I have a bit of a cold, if you can hear it in my voice. But one of the things that we benefit from in the US too is that we have the ability to collaborate and work together. You know, we don't have a border situation, if you will. And I'm a big believer that we can do more when we do it together. You know, there's an expression that's probably common here as well. It's that if you go by yourself, you can go fast, but if you go with others, you go far. You know, in the US, we do a lot of syndication. You know, so I've gotten investments through syndication, and I mean, honestly, there's a lot of power in that because it becomes more than just money. But speaking from, you know, an average citizen point of view, they need to have platforms and the opportunity to risk their own money. In the US, the vast majority of angel investors, they're investing out of their retirement. That's where that money's coming from. But they're also seeing outsized returns. And if you see the economy in the US, the vast majority of new jobs that are being created are being generated by startups. So my buddy who started Encino, he's responsible for 2,000 new employees, and 1,000 of them are in Wilmington. I mean, that's a pretty big success, outsized success. Yeah, but I really respect everything that I heard here on the stage, and I think the EU and CEE have tremendous opportunities moving forward. I just believe that there has to be more opportunity for risk. There is nothing learned by winning. Actually, one of the most dangerous things that can happen to a startup founder is that their first startup was really successful. Truly. That can be one of the worst things. That's like a kiss of death sometimes because it makes you overly confident. And then you go into that second startup because once you get the bug like me, you don't stop. You go into that second startup, and I've heard this story multiple times, with so much confidence and gusto that you end up just crashing and burning because you didn't know that it could go any other way. My first startup was an epic failure, and we had an incredible team. It's just the market wasn't ready. So, you know, my recommendation is to just take a deep breath and do the next right thing, make it possible for individuals to take calculated risk, you know, and celebrate the wins. And also having some type of public-private partnership that can sing the song of the winners, the ones that are solving a real problem that people can emotionally get behind, but also are scaling, to Martin's point, that are actually scaling and have shown that they're addressing a true problem. They have product market, product solution fit. Do some storytelling about that local hero, that local startup, so that others can get excited about it and let them invest in it. Because a lot of these startups, you know, they are struggling. And you know, with the changing dynamics in the US, we've got to do pivoting as well, you know, based on market dynamics. But I think there's just tremendous opportunity here, and I'm actually moving operations to Europe as well. You know, our company's currently doing an FDA trial, paid for partly by the federal government, and we've deployed technology in different parts of the United States, but we're looking to bring some of our solutions to Europe as well. So I'm here to learn and meet people also. But thank you for the opportunity to be here with you all today, and thank you for your attention as well. You're a great audience.
Thank you very much, David, for this honest and spiritful intervention. I think you're quite right. What we really miss in this part of the world is this very intangible element, but very necessary for building a long-term prosperity, and this is the entrepreneurial spirit and maybe the risk perception. So how we see risk is different, and it depends, as you said, from experience, from trials and errors. So this is very inspiring what you said. And Stepping on that, our next round of questions, I would like to delve a bit more with all the questions, and we'll tell in Bulgarian, to this part of the financial system that can really support the entrepreneurial spirit and can comfort the risk perception. And this is building a venture capital system as a part of the capital system, as a part of the capital industry and the capital markets. С този анонс.
On this note, I would like to ask a question. I have a question for Theodore. Your group was one of the institutions that have supported a number of instruments designed specifically to mitigate risk and support the development of venture capital funds in Bulgaria. Do you think there have been positive developments in Europe? Is Europe becoming more like the US in terms of venture capital? Are we likely to see more investments? And
now we switch to Bulgarian. The first round was in English, honoring the first speaker. So, благодаря ти за въпроса, Фия.
Okay, thank you. Yes, we have seen developments. We are still way behind where we should be, particularly compared to the US. Third quarter of 2024, we had approximately 3 billion euros in capital. We had 60 billion in the West, a very significant difference. And there is still a gap between that and raised capital in the US. But pension funds, insurance companies, and the restrictions they operate under are one key reason. This pension reform that we've been talking about reforming for 2 decades, I hope we'll finally see something happen there in the next few months so that capital can be channeled into more productive investments with a more adequate rate of return. But even if this is not a problem exclusively here in Bulgaria, we still see similar trends, maybe not as extreme as they are here. In Europe, we have fairly low rates of return, and very often, for example, German pension funds invest more than 60% of their money in the US. There are many alternative sources of investments. The Netherlands invests more than half the money of its pensioners in alternative sources. Croatia is another case in point, which even Croatian funds invest in Bulgarian funds, but no Bulgarian fund has invested in Croatia, for example. So yes, there have been developments, but not as vigorous or robust as they should be. There are a number of structural reasons. Rate of interest have gone up. And this has caused this has rechanneled investment into lower risk options. Normality will eventually return. We will be able to increase the funds mobilized, but this will take time. What is important to say, and this is probably specific to Central and Eastern Europe, is that we have a potential that we have not been fully leveraging. Here in Central and Eastern Europe, we achieve the same rate of return, the same profitability as that our Western counterparts and partners are achieving. with 40% higher capital efficiency, 40%. This is a great advantage. And I will probably be quoting Professor Cem Orlu for a long time to come in saying that the greatest advantage of humankind is its adaptability to different environments that he mentioned in his talk on several occasions yesterday. And we should be taking full advantage of this. We have lower operating costs, running costs, which in combination with talent, with a pool of excellent engineering skill, could potentially attract a much stronger investor interest. And Bulgaria is not an exception to this rule. Dronamics being a case in point, they raised 60 million. They are an absolute survivor. They've been on the brink of bankruptcy, I don't know how many times, but they have survived and they keep going forward. So yes, adaptability, our survival skills, probably because of what we've gone through historically, is an asset that we should be using. If you allow me, Tsanko, to disagree with one point that you mentioned, if we look at Bulgaria as an isolated case, and try to invest our investors or our money, this will not work. Bulgaria is very small, the region is very small. To be attractive, we should be looking at opportunities to pool our resources. And this is the reason why the single market, the savings, including in terms of savings and investments, is such a great opportunity. Big companies in Bulgaria, companies interested in more serious rounds, are turning their gaze outwards because here they simply run into one structural problem after the other. Many venture capitalists think that there are too many political risks. We are on FATF's grey list as well because of problems with money laundering, terrorist financing. Bulgaria has a lot of steps to take. Croatia, Mali, and Tanzania were excluded from the list. We are currently competing with Yemen, Burkina Faso, and Mali, and other countries are still on the list. So you can imagine where Bulgaria is in terms of potential, and this gives you, I hope, food for thought in terms of what we can still do in order to at least do well in terms of reputation. And I think these are things that are important, and we shouldn't be turning a blind eye. Again, going back to what I started with, there have been developments. Some of these are fairly encouraging, but there's still a lot to do. And we should also ensure that good examples in Europe have greater visibility. There is a unicorn in Romania. There is Enduro that have raised quite an incredible amount and are setting world standards, and we should rightly feel proud of these companies and probably use them to attract more capital to the region. But going back to what we discussed earlier, even if capital and even if companies start raising funds overseas, it would still be a good idea to keep their jobs here in Bulgaria. So thank you for this opportunity for an intervention.
Интересен разговор. Това е хубавото на тези форуми. Лошото е, че трябва все да се...
Thank you. We heard a lot of different viewpoints. The bad thing is that we've almost come to a close. Every one of us would like to see Bulgarian companies getting listed on the London Stock Exchange or the New York Stock Exchange. It's good that we already have some of those. But on that optimistic note, I would like to ask a question of Tanko, who's got a lot of experience through the management of the capital investment fund. You see a lot of interesting companies and interesting entrepreneurs. So what is it that we're still lacking? I would try to give you a brief answer, although there is a lot that I would like to share with you. We have excellent entrepreneurs. It's not a secret, but when I started at the Bulgarian Development Bank, I was really surprised that we actually had an excellent ecosystem. We had a lot of young people, very ambitious, very much set on being successful. But the problem is that, yes, indeed, we have the ecosystem. A lot of effort has been put into developing it, but we lack the successful end game. So what my colleague next to me was talking about, our capital market functions very difficult, very hard. It has a lot of trouble to make it, because if you're an entrepreneur, ultimately you want to get traded on the stock exchange, and yeah, that's the end game I'm talking about. Having this operational capital market, being able to raise funds from private investment, and then to achieve something and become successful. But the IPOs, the initial public offerings, and the companies that get onto the regulated market are not 0.2% of the GDP, which is 200 billion levs. So annually, we should get onto the stock exchange 3 to 4 million levs. Those are new companies that start getting traded, so that entrepreneurs get something out of it. In 2024, at our stock exchange, we had companies worth 6 million levs. So this is the capital. And it should be something like 400 million for countries at a similar stage in their economic development. So what we're getting is insufficient. Positive examples are something great. And I was happy to hear about Tronamics and other similar companies. But we really learn much more from our mistakes, from our failures. So positive examples are great, but we have to ask ourselves, why can't we, in the current environment, be more successful? Why can't we develop our capital markets? What are the reasons for that? And I believe we need government policy that is sustainable, that all the stakeholders can get together and draft it and then start implementing it. Because if we lack a single policy, we would keep waiting for something more positive to happen. And finally, Professor Ecem was talking about adaptation. Bulgarians tend to be very adaptive. They adapt easily to change and adversities. But I think it's time we started not just to survive and be survivors, but to prosper. I know that you also have a question for me on capital markets. But I knew that this topic is going to be discussed in this panel, so I was wondering what I can actually say. So I'll be brutally honest with you. There is just one place, or at least I know of one place, where the question of whether the size matters has a clear and definitive answer, and this is with capital markets and investment. We cannot console ourselves by saying, well, our size is really small. Our stock exchange, and I asked Sanko just to compare my memories. So the turnover last year was around 1 billion levs. Pension funds have 7 billion. So what can we do? We have assets to the amount of 7 billion, which has been invested. So this is not just true of the Bulgarian Stock Exchange. This is true of most of the markets in the region, even those that are slightly better developed. Even if you look in the Balkans, well, the size is more or less the same. And like other areas of life, if we join our markets here, we can increase our size significantly. So I usually agree that together we can do better. But while we are wondering about the common European market, capital market, we should start seeking partnerships at a regional level. We are very small, but we are also very segmented. And it's important that we can get in and out of the market quickly. So this is something that is not happening, but this is something that we should be looking for doors to open at the regional level. And the other thing I wanted to say is about government policies. We have excellent large enterprises which can be traded on the Bulgarian Stock Exchange and increase their size because they need financing. We are getting bond instruments maturing this year. So it's important to have those large companies getting listed because that would inject also external resources. We should not compare ourselves to countries that are very different from us. In Romania, Electric has drawn a lot of investor interest, and this has changed the situation on their stock exchange completely. So we talk about financial literacy and other things that are long-term, but there is something that we can do right now. For the past 25 years, I've been listening about capital market initiatives, and nothing much has changed. But once again, there are quick wins, and we should be looking at that, and that's joining the interests of other small players, looking at cooperation and regional projects. And also we should answer the question of how we fund our infrastructural projects, because every one of us needs investment in infrastructure. So we need to be knocking on doors and pushing them open. That's it. Thank you, Svetwa. Thank you, Sanko. Our discussion has gone in the direction in which it should go, and capital markets are a very important part of the entire investment environment and very important for the entire EU. So, final comments. Let me just ask a question of Martin, who is a former Minister for Innovation and Growth, and I'm sure that he's read almost every single one of the different strategies and recommendations on building the capital markets. So, can you tell us what are we lacking? What are the barriers? Why don't we have the capital market that we would like to have? Well, thank you very much for your question. I think we've heard a lot, and a lot was said about the benefits of having a well-positioned capital market, so that it has enough to offer, so having sufficient liquidity and getting promoted through good examples. For me, one of the reasons why a lot of investors do not invest is the story that they perhaps remember. A lot of people lost a lot of money just 10 years ago. So in order to change the mentality, we need time. Secondly, we need to position ourselves regionally, not just as a stock exchange, but also as a place where we can attract large investors in the Balkans, in Southeastern Europe. Investors would not come if we do not do that. We need financing, Interasat, Tronamics. We have a lot of good examples, but they stopped at $10 million, and then they start looking elsewhere because we are not on the radar as an individual country. We're not interesting to large investors. So we need to see at what stage in the life cycle of a company it is ready to invest and what it's ready to finance, and then look for further opportunities so that the stock exchange is ready to support good, viable companies with right promotional packages. Let me give you an example. HR Capital, I don't know if you have been following it, but they are on the stock exchange and they're using the BIM market. It is a light version that allows generating capital. And we have also some startups that have been very well diversified. You've probably heard of IBAC. We generate a growth of 56% on an annual basis. Of the startups, perhaps half would not survive, but we have an engine there which would keep a reassuring investment that we're able to mitigate risk and preserve liquidity. So to sum up, when it comes to opportunities to finance companies, I can say that currently they have access to capital. Just this year, the European Investment Fund would approve the requisite financial mediators, the VC funds, to the amount of 180 million euro. Some of them are already operational, and together with the equity that we are going to attract, that would mean something like 250 million euros. there are some procedures that are still ongoing, but we're looking at another 250 million that would become available to startups as of the beginning of last year. We have also the European Innovation Council, and both Tradamics and Indorasat have been taking advantage of those opportunities. These are grant opportunities and possibilities for funding innovation. Then, if there are companies which have something interesting to launch on the market, they're also looking for opportunities here on our market. So there are a lot of financing opportunities. The question it is just a question of how we ensure that there are no gaps like we had it in the past, and we should be agile enough. I mean, the stock exchange, the same as I mentioned with tickets. So we need to be able to provide the right incentives, and people should know that they're investing in something that is going to be successful. Thanks.
Thank you, Martin. You made a very good recap for all the instruments and all the policy measures and reforms and all the efforts that we have been doing over the years. So we see all the ingredients here and there, maybe not in the necessary scope and stage, but still we're on the right way to that. And with this remark, I will turn to David. You're the last one, and we close this panel with your last words. Now that you've heard what have been doing and how much has been done, you see that there are sleeping sources of capital that are quite abundant, that there are very many policy reforms. What do you think should be done more? Do we need to precise more on policy measures, or is it back to the mentality of each of us and our resilience and our belief in the future? And just I'm tempted to say, everyone mentioned the Professor Jemgo. It was a brilliant lecture. I enjoyed it very much, and I don't want to undermine in any way what he said, but Monica Stanishev actually asked him at the end, what holds the future? And he said that this is the young population indeed. But my intuitive answer was probably China. So it's not the right answer, but again, I thought maybe you can say this mentality shift is this what and why China is another example, it's another subject, we shouldn't go on that, but really what stays in the future.
Yeah, thank you for the question. You know, I think it's a little bit of both. I think we got a hardware and a software problem. So from a software perspective, it's a shift in mindset. You know, and sometimes the greatest distance in the universe is the distance between the heart and the mind. You know, we can talk ourselves into or out of things, but there's got to be a shift in that software mindset. And from a hardware perspective, it's the nuts and bolts of policy, the things that are happening here at this conference. You know, where we're talking about how do we build and create policies that fund innovation, that fund companies that can really explode, create a huge return on investment, make those early founders very rich so they can start more companies, invest in more companies, and feed that cycle. So I think we got to address the hardware and the software here. And the harder thing to do is move policy, right? It's a slow-moving machine, but there's one thing we can do very fast, and that's the software piece. It's, you know, what's the next right thing to do? Because we don't always know all the steps that need to be taken, but we always know the next right thing. So sometimes we just have to make that difficult decision and shift the way we see things, and then just take the step in a forward direction, in the correct direction. But then have policymakers and leaders step up, you know, and push for the things they know they're going to make the biggest difference. You know, don't worry about being that every decision that you're going to make is going to be loved, but actually just doing the difficult thing, being brave and kind. You know, doing the hard thing that's the right thing. You know, I think that's probably the way to go about doing it.
Thank you for the lovely speakers. Thank you to the audience for the attention. I hope that we've all learned something new and interesting. I hope to see you again here next year.